More and more people are moving to mobile payment. You just use your phone to pay something in the store or pay your bills, make donations, or wire your payment to another person through an app, mobile web browser, or even a text message. All over the world, electronic payment systems are changing the way businesses make money and consumers spend it. Market researchers predict that mobile payment market will nearly double by 2019 to more than $1 trillion. The World Economic Forum estimates that mobile money adds 0.47% to a country's GDP. Many believe that this innovation is not just a way to save time and hassle at checkout, but also serves as a disruptor that might shake up the banking industry to directly compete with established players.
I think we do worry about the impact of mobile payment on the bank, because the functions of the bank are to pay the money, to borrow the money, and to invest the money. But the three functions can be replaced by the mobile payment system. So some experts predict in the future, the bank is not a place, but the bank just is a service, and is any place you stay, there is a bank, because the mobile payment will follow you and play the functions of a bank.
Despite the market hype benefits and unexpected consequences that some have worried, mobile payment is still in its infancy. To better understand how people think about mobile money, Oxford Economics and Charney Research conducted a survey, and not surprisingly, cash and physical cards are still the mainstream, while mobile payments only account for less than 8% of the company income and consumer spending. But cashless payment is expected to surge in the next 3 years. A third of respondents globally think mobile will be the dominant payment form in 10 years. When asked to rate which payment types they will be using, we can see a 16% increase in mobile payment, 9% for credit cards and debit cards, while cash will be less prevalent 3 years from now. As consumers are more ready to move away from cash, most developed countries won't become totally cashless in the near future.
One of the major reasons is that we have very good traditional payment system, such as credit card, the RFID, such as the yo-yo card. So when we want to make the people to change their habit for payment, for paying money, it takes time. So for some developed countries, such as America and Taiwan, they usually adopt the mobile payment slowly.
As the professor has pointed out, it takes time. Although Taiwan is one of the world's leading digital nations, mobile payment adoption among consumers still has room for growth, which only accounted for 26% of the total e-payments in the country. In contrast, there are 77% in South Korea, 65% in Hong Kong, and 56% in China. But Taiwan is playing catch-up. The FAC, Taiwan's top financial regulator, hopes mobile payments will rise to 52% within the next 5 years. Two key areas where the technology faces a battle are building trust and security concerns. 70% of respondents say many high-profile retailer data breaches have made them wary of sharing personal information with a third party, while 55% says security is their main concern. But many experts argue mobile wallet and e-payment is actually a safer way to pay. For every transaction, mobile wallets create a random, one-time number that is a transaction token. And even if someone was able to know that number, it's not valid later, and you never have to take out your credit card or debit card. So there's a lot less chance for someone to see it.
There are several advantages about the mobile payment. The first advantage is the mobile payment system will collect the personal data to provide advanced service in the future. Secondly, I think the mobile payment system make people to transfer their money from one account to another account very easily. For instance, they can invest the money for small amount. They can invest a small amount of money. They can to the P2P lending, I can lend money to another person very easily, and also I can transfer my money to the overseas account. So it makes a lot of, traditional banking activities change a lot.
In conclusion, mobile payment adoption in Taiwan is more like an evolution than a revolution. As the mobile wallet ecosystem continues to grow and expand, there's still several barriers to overcome. First of all, consumers and companies need more education on how mobile and digital wallets work if the market is to achieve mass adoption. While many users say convenience is their reason for paying by mobile phone, a large majority who have not adopted this payment method have the exact opposite view, saying they just don't understand mobile payment and its benefits. Too many choices also mean they're confusing for consumers. Successful introduction of a mobile cashless payment depends wholly on the level of seamless integration with various players and major systems in use today. Of course, all of those security concerns have to be addressed. Mobile payments appear to have an age-old problem. For a product to catch fire with consumers or businesses, it has to solve a problem, a pain, or struggle. To them, the advantages of joining are not apparent, at least for now.